Okay, the holiday season is just around the corner here, and if you want to know how that's going to affect the Halton Region real estate market, then this video is going to be for you. Now here, what I'm going to be doing is showing you some real active data, behind the scenes from the MLS that we see as realtors, so that you can make your own decisions. I'll give it a little bit of context, etc., but it's not going to be filtered. It's just going to be raw right from the system here. Now, if you're not familiar with who I am, my name is Andrew Roach. I'm with the Roach Family Real Estate Team. We are here, realtors, for the last almost decade and a half in Halton Region specifically, helping hundreds of families over that time buy and sell and invest and really ultimately navigate young families getting through this crazy real estate market and helping them, go through the largest investment decision of their lives and just really big life-changing decisions that they have to make, right? So if that sounds like you and you wanted to have a little bit of a larger discussion, we're happy to have that anytime. But in the meantime, let's get into the data here, and so you can see what's really actually happening in the Halton real estate market. So looking at the MLS here, first thing I want to do is just kind of show you and illustrate the cyclical nature of the real estate market. As you can see, it kind of looks like a bit of a heartbeat here, right? We have our peaks, we have our troughs. As you can see, that the peaks are always going to be the spring, and the troughs are going to be the winter, right? So if I go back to 2015 here, the peaks are going to be May, June, May, April, May, etc., right? The troughs are going to be your December, January, each and every single time. Now, the fall markets are that little kind of like hiccup, right? Hiccup. If I was to say like a heart sound is, a lub dub, if you remember that from back in school. You got your peak is going to be, the spring market is going to be your lub, and your fall market is going to be your dub, right? So sometimes it's a smaller transition, the fall market, and other times, as we're starting to see the last 2 years, the fall market kind of like picks up a little bit more, right? But historically, that's not necessarily the case. It's not always going to be a big spike in differences between the spring and the fall, or as we kind of taper off, right? As we see in 2023, it really just kind of fell off. There wasn't really a fall market, so to speak. Give me a moment, and I'm going to jump into specifically the Halton region. This was the entire TREB MLS system, so it goes not even just Toronto, but well beyond the GTA into all the submarkets around, anywhere that people will list the properties into the more rural markets as well. Okay, so here we are in the zoomed into Halton region here. Now, the first thing I want to do is I'm going to go through new listings, right? So we're going to look through new listings, active inventory, sales, days on market, average price. We'll talk about the interest rates, and we'll kind of talk about what that all means, really, right? So one of the first things we want to look at is new listings. Now, if you look at this kind of like this heartbeat, it looks a little bit chaotic here, but you can start to see that same cyclical approach where you're going to have more in the spring, less in the fall, not a lot in the winter around the holiday season, etc., right? Now, what you'll notice is that just like almost every other year, the number of new listings falls off in October, right? From September to October, we had the number of new listings that came on the market was down 20.7%. So as you can see here on this little black part, right? If I go back to the year before, down 13%, year before that, down 14%, et cetera, right? So I can continue going back. But one of the things that I will note, is that how high, even though we've come down a fair amount as far as new listings coming on the market, in relation to previous peaks, our kind of like slower market, if you will, is higher, or almost as high, I should say, as some previous peaks as far as inventory goes, right? So now if I go back here, this is going to be, 2023, right? So if we go back to some of the previous markets, the craziness, et cetera, September 2021, not a lot of new listings come on the market. But if you remember that time frame, there was not a lot of inventory that came on the market. People wanted to buy and they wanted to move, but they had to find something first, and they weren't going to sell and list their house until they found something, right? So that was a bit of an anomaly, if you remember that market, right? But what I'm looking at here is I'm looking to see that inventory coming down, which is what we want, or the number of new listings coming on the market, decreasing, because we do have a lot of inventory on the market still. So we do want to see that coming down. And I just wanted to see how in relation to previous years and where that is. So we still are elevated, but it is nice to see, a 20% drop in comparison to maybe previous years of, 13, 14 or less, right? So next thing we'll do is we'll jump over to the active inventory. And here we have in Halton Region, we have our active inventory. Now, you can see here how much inventory on the market there is. And what I mean by active inventory, that these are houses that are currently listed for sale for buyers to come and purchase, right? So obviously we are at 10-year highs because I've gone back to 2015, so I've only gone back 10 years, and the system will only go back 15 years, only back to 2010 here, at least these metrics will. So I'm not missing a ton here. If I cram too much in, then you kind of lose, it gets a little bit noisy. But as you can see here, we do have a lot of inventory on the market. And so really what I'm looking to see is next, we're going to be looking at sales, but really what I want to see is I want to see the number of new listings coming to the market decreasing, the number of sales increasing, thereby less houses coming on the market and more coming off the market, so that the number of active listings comes down and there's less opportunity and there's less to choose from, which will just maybe put a bit of in the real estate market. And as you can see right now, we still have a lot of inventory, so which means that this isn't going to change overnight. It's not going to change anytime soon. We're probably a ways away before this slowly starts to work its way back down to kind of maybe, I'll call it normal levels, right? As far as try to get it into a little bit more of a balanced market. Right now we are, if we're not in a buyer's market, we're certainly knocking on that door pretty hard. So the next thing I'm going to be looking at here is the sales, right? So we have transaction volume here. So like I said, we want to see new listings coming down, sales going up, which will bring the active inventory down a little bit. And thankfully, we did see a nice little uptick as far as sales go in the region, up 20%. So we had number of new listings coming down by 20%. And a number of sales increasing by 20%. Now, again, context is important, right? So it's nice to see that they went up, but are they going up more than normal to offset the abnormality of the number of listings that are on the market? And if we go back a year ago, we were at 25% increase month over month. And I'm talking month over month here, not year over year. So we went up a lot, but not as much as last year before. As an example there, it was actually down 10%. Year before that, 2022, down 15%. Again, these are sales, right? So it is nice to see that the number of sales are going down. And even in 2021, the peak of the market, while everything was selling and people were tripping over each other, October 2021, month over month sales only went up 2%. So it is positive to see the number of sales coming up. Of course, the interest rates coming down yesterday. Was it yesterday, 2 days ago? A couple days ago, anyways, 29th. So a week ago, it was nice to see that came down, right? That the interest rates came down. So that'll certainly help. And I think that was projected. A lot of people talked about how interest rates were coming down. It gives people a little bit more confidence into things, right? Next thing we're going to look at is going to be days on market. Now, I don't really love the days on market metric in a market like this. If it's a more stable market, then the days on market has a little bit more significance. And if I remember, what I'll show you is a waterfall at the end here, maybe. But what that really means is that we're seeing days on market increase. And it's the number of days a listing on average is on the market. And it can come off the market because of the listing expired. It can come off the market because it was terminated, meaning that they canceled the listing and they removed the house, it's no longer on the market. Or it can come off the market because it's sold. Now, when we see, the average days on market, what do we got here? 24 days on market for Halton Region. If you have spent any time on MLS, and you're maybe actively or even just kind of passively, just kind of like out of curiosity looking, you're probably seeing houses on the market for a lot longer than 24 days. That is the case. A lot of houses are on the market for well more than 24 days. That's not to say that they didn't cancel the listing and come out at a different price. When they do that, sometimes it ends up being a whole new listing if they've changed the MLS number, et cetera, and they don't change some things. I think the market system is doing it best to kind of track that, but it doesn't always get picked up. But furthermore, if people cancel their listings, it doesn't necessarily mean that the house sold, right? It's not giving you, it kind of gives you the impression that the house is only going to be on the market for 24 days before it sells on average, when in reality, it might only be on the market for 24 days on average before people kind of like give up on that strategy. And whether the new strategy is let's wait a year, or the new strategy is let's wait till the end of the summer, or let's wait until X, Y, Z, right? Whatever the case may be, if it doesn't sell, it comes off the market. So we did see a little bit of an uptick overall, not by much, one day on market from 23 to 24, but it is a bit of an uptick, which in previous years, again, we typically see that little bit of an uptick from September to October anyway. So that's kind of just following along with the trend. So the last metric we'll look at here for Halton Region as a whole, before we kind of maybe dive into each individual municipality, the average price. Now, of course, this is going to be what people almost mostly care about, right? Is like, hey, what can I sell for, and or what can I buy for? So on average, in Halton Region as a whole, we did see the average price come down about 2% month over month, right? So we saw it come down to $1,139,000. I think a lot of that had to do with, even though there was a lot more transactions that happened, as we just talked about, it was lower priced houses that sold more this month than maybe previous months. And like I said before, when we kind of like zoom out a little bit to kind of get more data to even things out, the nuances, when we kind of do year over year, we saw a negative 5.5% decrease, right, from year over year. It starts to get some of those ebbs and flows, right, that when more expensive houses sell one month, or more less expensive houses sell, it will certainly impact that average price point. I think it would be good to note that I think one of the reasons why we're kind of seeing this gradual trend down in average price is because of the amount of new listings that are coming on the market, and more importantly, the number of active listings that are on the market. Buyers have a ton of choice. There is a lot of negative sentiment in the real estate, in the news and the headlines, et cetera. The economy isn't overly strong. It doesn't give people the confidence, and despite the fact that interest rates are coming down, other expenses are continuing to climb. Right? As an example, a letter went out just last week to everybody in Milton saying that the Milton hydro rates are going up by 40%. People's paychecks aren't going up by 40%. And so the cost of living just continues to increase, even though interest rates are coming down slightly. It's kind of like getting that little relief check from the government for like, $100 when your grocery bill just went up by 200. It doesn't help, so to speak, right? So let's dive into each individual municipality here in the region and see how each Burlington, Halton Hills, Oakville, and Milton did separately when they're after they're pulled apart. So let's look at each individual municipality on its own after we've kind of pulled them apart from the region. And so we'll start from the top again. We'll look at new listings for Burlington. Again, as you're seeing, number of new listings coming down month over month, 22%. Again, certainly a positive given the number of active listings that we have on the market. Still elevated from previous, right? So if I look at June 2022 or 2023 rather, we're still at or above, that number, right? So the number of new listings, while it's coming down, is still high for Burlington on its own. If I jump over to active listings, so here we have the active listings here. Still, as you can see, still elevated. Now coming down, again, good, down almost 8% month over month, still up 18% year over year, right? So we still have that big bump in active inventory. And so we won't see prices really stabilize, I don't believe, until that number of active listings comes back down to kind of more moderate levels. Now, if I jump over to to the number of the number of transactions, same thing following suit with the rest of the region here. We did see an increase of just under 8% month over month, but still down almost 5% year over year as far as number of sales go. Following suit here for the most part. If I kind of look around here, where's my October? Yeah, so you know what? It outstrips previous years where the number of sales were down historically, at least over the last little bit here, with the exception of last year and 2024, where the number of sales for Burlington was up 35%, right? So we can kind of like track that along. Nothing drastically surprising, but we are starting to see, that number of sales going. And one thing I'll say, and I'll probably say it again, is that real estate is a very slow moving ship. If any of you guys spend any time kind of like, working the stock market, it happens like second by second, minute by minute. Whereas the real estate market is such a slow moving ship that it generally takes months for things to happen, right? And sometimes even quarters or years for things to happen. So it'll take a little bit time, but what we're going to start to look for is we're going to look for the number of listings to come down, the number of sales to go up before we start to see the real estate prices as a whole start to curve up on a permanent basis, or at least stabilize for the most part. So jumping over to days on market here, similarly, days on market creeped up here just slightly, just by 4 days on market on average. I already talked about what days on market really means in this market, this style or this atmosphere that we're kind of in as far as the real estate market goes. I don't love it, but I think it's still a metric that we can kind of follow just to see how long people are keeping their houses on the market for one reason or another. Now, one thing I will kind of touch on briefly for Burlington here is we did see, a relatively consistent drop off as far as sales go. The average sale price in Burlington, it dropped 5.7% month over month. So that's pretty substantial dropping down below the $1 million mark to 987,000. Now that's not to say that the average, I guess it is the average price, but it's not to say that detached houses are worth significantly less. What we see here is, actually, if I can take half a moment here, that's the wrong click. If I can take half a moment, and I will, a summary of stats. This is what I wanted. I'll show you that the number of townhouses, you know what? I'm not going to do that because I have to change too much. But the number of condo apartments and condo townhouses, when I looked at that, almost doubled, right? So more lower end houses sold the last couple of months in comparison to previous months than the detached, right? So because I'm looking at a 10-year gap here, is giving me all the data for the 10-year gap, which is not really what I wanted. But when I zoomed into that, what I saw here was, like I said, the condo apartments, which would typically sell, into that that $600,000 to $700,000 range kind of thing, that doubled, just under doubled. Condo apartments went up significantly, probably about 80%, and the number of sales for detached came down a couple, right? I think it was 120 one month and then 101 the next month, right? So when you have less higher end homes sell or more expensive homes sell and more affordable homes sell, then the average price comes down. And so that kind of it skews the inventory, it skews the data a little bit. It doesn't skew the data, it skews the interpretation of the data a little bit, because it makes you feel like your house is worth significantly less, but in reality, it was just more lower price homes sold for the average. Now, you could jump over to the median price and let's see what that does, which I didn't really have that in, but same thing, right? So the median price kind of falls off a little bit, but again, that kind of goes with more of the lower end houses sold, which would pull that down, right? So the median price is at a lower bracket. So if I jump over to Halton Hills, start over again here, we look at the number of new listings. We saw the number of new listings fall off as well, decrease 17%, so a little bit less than some of the other markets here. But again, we typically see that. So last year, down 8% or 8.7%, so a nice, a bigger drop month over month this year from last year. October 2023 was down 20% and 8%, right? So somewhere between that 8 to 20% mark is relatively normal. Down 10% the year before, down 5% the year before, right? So we are following that same, sort of pattern. But really, again, like I said, we do want to see those the new listings coming off the market. And sorry, I did said new listings coming off the market. I meant less listings coming on the market, less new listings coming on the market. So active listings for Halton Hills, again, same story, right? We do still have that big increase as far as active listings being on. So a lot of inventory on the market, a lot of choices for buyers. Again, the economy is certainly not robust right now, which doesn't give people the confidence to be out there and making a big, large financial decision when other expenses are so high and maybe employment, a concern for them, right? So active listings coming down, which is, again, good. What we want to see, we want to start to see that slowly start to come down. If I jump over to transactions to see how many of those, coming off the market was because of the transactions. So a slight uptick, which means that more houses probably terminated, meaning that more houses came off the market, they expired or they canceled the listings than necessarily sold, right? So slight increase, 5% increase month over month as far as the number of sales volume going on. Okay, so days on market as far as Halton Hills go, it actually came down from 23 to 22, so nothing significant there. Again, probably just people either selling them quicker or taking them off the market a little bit quicker as well, right? Average price, let's see how that was affected. Now, we're going to see a big drop off here, and I am going to explain that in a second, because if you remember on the last month, if you tuned in last month, I did highlight Halton Hills, and I actually went in and I think I highlighted that I think we had about 8 multi-million-dollar houses sell that month, which I think increased the average sale price by like 20% or something like that, right? So it was a big jump. Now, if I go historically, so it was a big jump, right? So it was the biggest jump, certainly. A lot of other places were down. But if we've been all summer been sitting in around that 960, 970, 950 mark, and then all of a sudden we jumped up, over $100,000 on average. And then we came back down again to kind of the more normal, right? So this is the thing, when you have like a bit of a smaller market like Halton Hills, if you have a few multi-million-dollar houses that sell, these rural properties on acreage that are, new build, et cetera, you get these outliers. But for the most part, over the years, Halton Hills has been around that mid $900,000 mark roughly. But then every now and again, it just peaks up because you'll have 1 or 2 more expensive houses sell, and then it comes down again, right? So this is what I mean by, you can see that in the data as far as the median sale price goes, right? How it's, you want to see that kind of balance out. The same thing over here with the average sale price. And I think I talked about average before. I meant median price, jumping up $250,000 and then back down again, right? So same idea. You just have that one little kind of like outlier that really just pushed it up because we had a number of sales that were on the higher end that skewed the data. Okay, so let's jump into the Milton market here. What we're seeing is, same tail of the tape, right? So a decrease in the number of new listings come on the market, down 19.4%. Last year, it was down 8%. Year before, where are we here? Down 14%. So we're ahead of previous years, down 10% and down 12%, right? So being down almost 20% is significantly more as far as new listings coming on the market. So we do want to see a significant decrease in new listings coming on the market, but really we want to see, all of that come together as far, to formulate that story that the active listings are going to be coming down. So as we see here, active listings, again, same thing, well above kind of like the average, but it is coming down significantly more, which is great to see. Really would like to see that, below this previous peak, 400, almost 500 homes, right? Back in July 2024, and ideally maybe down, even over here, 2018 of around 400 homes, right? So here we are sitting here at 570 homes. So if we have 170 homes come off the market, would bring us back down to nice, almost more comfortable averages, and would certainly, put a floor to the real estate market for sure, and maybe even give us a little bit of an uptick. So if we flip over to active sales, the number of sales is what I meant to say. So we did see a bit of an increase here, month over month, 20% increase, which is great to see. But how did that compare in previous months? So last year, also 20%, 12% the year before, 31% 2022, So that was a negative 30% the year before. Wrap this one off here at 12%, right? So it was nice to see a good strong uptick in the number of sales volumes. So we did kind of lag a little bit the month before, and not really a big jump from August, but again, the real estate market's cyclical. We're going to see the same kind of behavior year over year for the most part. Now, days on market, we'll expect to come down slightly. Yep, there we go. So down probably just one or two. Yeah, two days on market. So again, I talked about the days on market, what that means. You know, it's a metric. It's certainly not going to be one that we're going to really lean on heavily. And then nice to see a little bit more of an uptick for average sale price going up. What do we got here? Just under 2% month over month, and just a little over 2% year over year. So we are kind of starting to trend up a little bit here as well, as far as average sale price goes. Been for the most part sitting in that kind of like that pocket here for the last number of years. But as you can see, if you were to draw a line. Okay, so let's move on to Oakville, our final municipality here in Halton Region. Starting from the top here again, new listings, same idea here. Down 21% on as far as new listings coming onto the market. Still, you can see that it is kind of like elevated, last number of years, more like moving our way up here as far as number of new listings coming on the market. If we do flip over here to the active listings, looks very much the same as all the other municipalities, of course, not surprising. We are still elevated, and we are starting to taper down here as more houses sell and less come on the market. So certainly good to see that as every other municipality as well. And meaning that we're not just getting, one municipality that's kind of like outperforming all the rest of them. That for the most part, as a whole, the entire region is working, clipping at the same pace, right? So number of sales increasing, a pretty good jump month over month, nearly 40%. So here, what I was just a moment ago saying that there's not one municipality that's outpacing the other ones. Here we have Oakville, as far as sales go, outpacing the number of sales. Now, we saw that in the past a little bit, that of course Oakville is going to be, for the most part, going to be the leader in Halton Region. You do have, it's the most, the closest one to downtown Toronto. So commuters, it's a relatively easy as far in comparison to all the other municipalities. You do have a little, larger homes down by the waterfront. So those that are looking at real estate as far as their houses go as an investment, I think that I might be speaking out of turn here, but I think that the people that are quite affluent aren't affected quite the same way as most people as far as the cost of living increases. The stock market is at record highs, and I think when people have a good amount of income and a lot of investments, and those investments are growing, they feel a lot wealthier and willing to go and spend more. Whereas those that are on a salary, and the salary is, that's kind of a fixed income, so to speak, your salary isn't keeping pace with inflation or the cost of living increases, we don't feel, quite as confident to go out there and make those big spends. So we will, oftentimes see, when things are starting to do well, when interest rates just come down or are expected to come down, we will see people go out there and buy, some assets, et cetera, right? So we might have seen the bigger increase in Oakville from that, but I'm not gonna lie to you, that is a little bit speculative, given that I don't have broken down individual data, that kind of a topic, right? And then so flipping over to days on market here, that was pretty flat, didn't change at all, 27 days. So, we talked about the days on market already. So, not surprising there wasn't really a significant move, just like all the other ones. Now, average price still kind of like trending down here, as we can kind of see over the last number of years, still kind of trending down. But again, that goes hand in hand with the overall real estate market and the number of inventory on the market. Over the last number of years, interest rates going up, cost of living increasing, et cetera. So as a whole, we are starting to see, are continuing to see that trend down, and we'll likely to continue to see this trend down for a little while longer. I touched on this earlier. Real estate's a slow moving ship. So not until we start to see those elevated levels of listings coming down to kind of like more normal markets, then will we see the real estate prices maybe start to stabilize and start to creep up again. So I said earlier on that I wanted to talk about the waterfall and how new listings and cancellations and all that kind of stuff, basically when I was talking about the days on market. So I'm going to touch on this here briefly. So what we're starting here with is we're starting about the number of listings. Now this is the entire MLS system again. This is just from last month to this month, right? So the entire MLS systems, we started with 67,000 listings as an example. We ended September with 67,000 listings. New listings coming on the market were 31,000 listings coming on the market in the beginning of October. Now, from that, we're through October, I should say. So from the beginning of October to the end of October, we saw 31,000. Now, the number of listings that came off the market from varying degrees, suspension. So when it's suspended means that you're still in the contract, the homeowner is still in the contract with the listing agent or the listing brokerage, but it's now no longer offered for sale. So you won't see it on realtor.ca or any of the third-party sites that pull data for those purposes. That might mean they'll bring it back later, but for some reason, maybe they're going to do a renovation, or maybe they don't want to list anymore, but the listing agent won't let them out of the contract. There's any number of reasons why it might just be suspended, but it is no longer offered for sale. So that's one category. Expireds. So the contract has gone its full term, right? So it's gone from start to finish. It didn't sell. The contract has expired. It's now null and void. So that's one reason. So we had 6,576 homes suspended, contracts, the listing contract expired. Then we have the actual transactions, which is the number of sales. So we had 13,044 sales. So those are the actual things that we all want. We want a sale. And then we had terminations, 15,782 terminations. And of course, what that means is that the seller and the listing agent or brokerage agreed to cancel the listing. Now that could mean that they parted ways and said, hey, I'm not listing with you anymore. I'm done. That could also mean, and this is more the case, that they cancel the listing at one price and then they relist it at a new price. And so you could have that multiple times where you're doing price adjustments and it's a cancel relist. So that'll get captured into this as well, right? And so once you add in all the new listings coming on the market, less the suspensions, terminations, expiry. Okay, so what that looks like here, at the end of September, we have the 67,000, right? So the new listings coming on for October, we've got 31,000. So then we subtract the number of suspensions, the expirations, the transactions, and then of course the terminations, right? And then whatever's left over carries over to the next month, and then you start over again. So in this case, we lost about 6,000 listings as a whole. Again, this is the entire Trev MLS system. But, in a more regular market, instead of having more terminations than transaction, we would have significantly more transactions than terminations. And so what does this really mean? It means that the reason why we're having more terminations than transactions is that it's both good and bad. On the one hand, we're having sellers that are saying, hey, I'm confident and comfortable enough carrying this house for however long. I will terminate and I'll try again later. So it's good that we have the robustness and the health in the housing market and the ownership of carrying those homes. On the flip side, the negative is that the gap between the sellers and the buyers, I think right now, is at, I don't know, I'm making this up, but at a historical level, right? The gap is so wide that what it means is that buyers are saying, I'm not paying that price. And so sellers are like, fine, I'll wait, instead of coming down in price, down to the point where buyers and sellers are now close enough where they can make a deal. The gap is too far. In the past, and again, anecdotal, maybe it's $50,000 apart and you can each kind of I'll come up 25, I'll come down 25, we meet in the middle. Whereas now we might be $300,000 apart and I'll come down 100, I'll come up 100. Well, now we're still 100 apart, and that's an insurmountable number in order to be insurmountable gap, right, to cover. So I think that until we see sellers come down more to a more, dare I say, reasonable or acceptable level to buyers, and or we see buyers having the ability and or confidence to come up, we're going to continue to see this, right? In which case, we're going to continue to see a number of listings being elevated, right? So, and one of those reasons will be continuing to see the interest rates come down, et cetera. So let's roll over to the interest rates. As far as interest rates go, we just saw last week on the 29th, we saw the interest rates come down 25 basis points, which is good. We're seeing interest rates come down, which will help buyers. Of course, side note, a cost of living is still going up. Milton Hydro sent out a letter last week saying that hydro rates are going up 40%. So when interest rates come down, 25 basis points, 1/4%, but hydro rates are going up 40% and food prices are going up, astronomically high, et cetera, et cetera, et cetera. I don't know that this is going to be enough that's going to give people that confidence to say, yeah, okay, let's go. But it is helping a little bit, right? So where's things going? The US has this thing called the CME Fed Watch, right? And so what they're doing is where in Canada, we have a defined rate, right? 2.5%. 2.25%, right? What I meant to say. In the US, they have a bracket, right? So they're at 3.75 to 4. Right? So what they're predicting right now is that the U.S. in December is going to, they're saying a 64% chance that the U.S. will drop interest rates in a 1/4 basis point in December. And then they'll hold that probably until the spring where there's a higher likelihood that by June, they'll lower again. So they're saying that they're probably going to pause for a little while down there. As far as Canada goes, they're anticipating, I was ahead of myself. They're anticipating that we're going to hold on to these interest rates at 2.25 into December, the next one, where the U.S. will drop, will hold. And then the predictions here are that there'll be a higher likelihood that we will lower interest rates in January, right? So we'll see how that plays out, right? The budget was just announced yesterday, and whether or not that passes or not will determine maybe the future or the next certainly probably 6 months or so. We either go into an election or we continue on with this debt bomb that we're accumulating. Well, whatever will happen, well, we'll see. That will affect things. But one thing will be for certain, in my opinion, is that the real estate market is a slow-moving ship, right? So we will not see a quick change, right? We still need to get through all that inventory, right? We still have to get through, the elevated levels, right? All up here, right? So active listings. We still need to bring this back down again to, more normal levels, if I say normal levels, whereby buyers are comfortable buying, sellers are comfortable selling, and then we start to get those sales activities happening on a regular basis, and that turnover happening, and that I think will be the bottom. But regardless of what happens, I believe, and again, I don't have a crystal ball, but I think that we're probably at least a year away from probably seeing that bottom. And if I look at, this turnover rate and how we have our peaks in the in the spring is what I meant to say. And then we see, a pretty, it falls off in the spring and then we have a little blip in the fall, et cetera. When we see that cyclical nature, the chances of us getting through the spring, okay, we might chew through some inventory, but I bet you we're going to probably see prices slide or at least stay flat. Then we're going to go through the summer, which is going to be this fall off dip, right? Then we might have a little bit of a blip in the fall, right? Whether or not that's going to be enough to really push prices up, but then we're going to go into all of these troughs, right? Every one of these valleys along here is December, January, which we're heading into now. It might very well be next spring, not this one coming, but spring 2027, where we might see those levels kind of like bottom out and we might start to see things going. So I don't, not a crystal ball, but I want to give it to you straight, right? So I know this was a long one. I always have a lot to say. I want to share as much as possible. I don't want to scratch the surface. I want to give you the real world data. So if you found this valuable, like, subscribe, share, etc. It certainly helps. Lets me know that I'm doing the right thing. Comment, let me give you your feedback. What are you guys thinking, right? That will always help as well. Anyways, I'm Andrew Roach with the Roach Family Real Estate Team, and this is your October Halton Regional Real Estate Market Update. Thanks.